How's it going? Welcome back. It's Jonathan, and in this video we're going to be taking a look at the recent Bitcoin price action, and that's definitely the most recent Bitcoin price action considering I did a video about just 2 days ago. But something has come out overnight. I was up until about 12 to 1 o'clock last night just trying to get a gauge on the market and see where it might be heading next. So if we take a look, there was some news that came out that China had actually banned Bitcoin completely. No transactions or anything could occur in Bitcoin. Obviously we've got some people coming out now saying that the news was fake, and it's slightly being confirmed by a few people now. I don't know whether it's fake or real. To me, that's slightly irrelevant, but it brings up a good point. And the point is that I want to make today is that there's a few things that we have been focusing on, and I've been primarily basing this whole channel around a bullish perspective of the market, at least as we head into the end of the year, because that is the anticipated cyclical reaction that I'm expecting, is that the market is going to turn upwards and move higher. But in saying that, I think it is fair that I only show you the real way to gauge the markets, and at least the real way in the sense that I've only got about 10 to 15 minutes with you, so I'm only going to be able to share so much of this, but I'll try to give you some tips and some clues on what you should be doing when you look at trading the stock market or even the Bitcoin cryptocurrency market. So first of all, we're going to take a look at the charts. Just a quick recap again of where we are and what happened overnight. And then following that, there's going to be 2 points I'm going to make. Actually, I'll make the 2 points now, that way we clear them up. So first of all, in any market, whether you're inherently bullish or bearish, you also need, and you should also be, having a look at price projections both higher and lower, because trading is about probability. I know I go into these cycles and I talk about time aspects and how the market can reverse, and it's quite easy to predict and that sort of stuff, but I'm only saying it's quite easy to predict due to the probability of it happening in the past and me being able to accurately do it out in the future. So the probability of that theory is very, very high. But what happens if you're using a theory that doesn't have a high probability? Well, trading is all about probability, so you need to be looking both higher and lower in price in case the market doesn't do as you were expecting. So we already know what's happened overnight. If I go ahead and zoom in here, the market rose up from the 21st, came up, hit a top on the 24th, and then pushed all the way down. Now, this decline in the market was quite severe in regards to what its recent price action has been, so it was heading up steadily. And then the last bar, which was considered an outside bar, is quite severe in the sense that it was getting quite low to the low that occurred on the 21st. Now, a lot of people may have been thinking, where is this going and where does it take us next? So I just thought that I would do this video on that topic, and that we can get an idea on both the bull case and the bear case, because there's a lot of ideas and there's a lot of people now coming out to suggest that Bitcoin is going to go down to 20,000, and some have even put like 28 to 30,000 on the cards. So if it is going to go down there, well, Bitcoin has to move through a series of levels that a lot of people are watching, not just me, but a lot of other people, a lot of people that are considered smarter than me. So I want to go ahead and put those levels on the chart so that we can see what other people are looking at. And then using that information, we want to see what the probability is that the market could fall that low. So we'll just go ahead and take a quick squiz at the charts just to see if there's any formation that has changed. So as we can see already, based on the last weekly chart, this is it here, so that ended yesterday. So now moving into the Saturday period here. Whether the market's going to move higher or lower from here is to be seen. But we just need to keep an open mind and just remember that this move here, based on standard bar chart rules, is considered one move. Okay, so we don't have a definite low or a definite high in the market based on these charts here, and we don't have a definite low in the market because this bar here could still go lower. Okay, so that's something we got to keep in mind. It's only considered a low after the fact that the market has continued to move higher. Okay, so that's just something that we need to keep in mind. The monthly chart, still looking the same. It came down and it touched this 61.8% of the all-time range. So it's moved down, hovered around the 50%, moved up, came down, hit the 61.8% of the range, and it's slowly moving up over the last few days of the month. Bitcoin swings, yes, now this is our most recent price action here. As we can see, the Bitcoin swing, especially from the daily Gann perspective, is still pointing down, though it hasn't broken the low here on the daily chart, and that's primarily because the market came down to around the 40,700 mark, and it actually needs to go down to around the 39,000 mark to actually breach that low. Though on the weekly, we're still lower than the last low, so technically, until that changes, it does give the bearish scenario a high probability at the moment. So it's not saying that the bearish scenario is guaranteed, but the probability is currently higher. Just using that as a simple rule and also a standalone rule. Kagi charts, we haven't changed anymore with this weekly Kagi chart. As we can see, it's changing, still on the green one there. With the red Kagi chart on the daily, it hasn't confirmed yet another swing lower, and we're probably coming up to the midpoint of that swing there right now. So I wouldn't put too much emphasis on the Kagi chart just with the most recent move, but it's something that we should be considering. All right, so now this is the price action. Let me go ahead and close this because that's just some analysis. So when it comes to Bitcoin price action, I've got down the bottom here, I got a VIX fix and a 500 period Wilder moving average. And then I've also got some price analysis on the right hand side, which I was doing last night. So what we've seen in the past is we've seen that when the VIX, when we're using the VIX fix as a form of analysis, when it got above the 45 point mark, that generally pointed to significant lows that we should be looking at buying. Now the VIX fix is a buy and sell signal, so it does give us an idea on when we should be buying and when we should sell. When it points above the 45, that's when we'd look to buy. And when it goes below, I believe it was the 5, that's when we'd be looking to de-risk and potentially sell out of assets. Now there are some extreme moves in the market which go above, I think it was 55 to 60. And these are capitulation lows. And these are generally, often speaking, the best times to be buying. But we've got to keep it just, I'm going to start maybe showing you this VIX fix just so we can get a gauge on the market. I don't really go into the volatility that much, but I'm going to put it on the price chart moving forward so that way we can simply watch it as we play out. So at the moment we are currently sitting below the 25 point mark, which is roughly the midpoint between these two. Not exactly, but roughly, based on a moving average. And we are in currently right now no period of buy and no period of sell, so it's simply a waiting period. If we were to look at the actual charts though, we do have so if you're not well familiar with what these boxes are, these boxes are price clustering, so it's where a lot of price analysis theories come together, and I put them on the charts, and then we can gauge if there's going to be potential bullish or bearish sentiment around these areas. So the two strongest points that I want to point out right away for the Bitcoin chart is around this 40,500 mark down to around the 38,900 mark. And then the second one is around the 34.5 down to around 32. Those, in my opinion, are the two most strongest price clustering locations where a lot of price analysis theories are coming together, and Bitcoin actually needs to break through them in order to go lower. So there's still a lot of calls out there, you know. There's some people out there that are still calling for this $20,000 range. Now if we go back, I'm just going to bring up the chart, and we go back, squeeze this up quickly, $20,000, they're suggesting that Bitcoin could hit the tops that occurred back in 2017. So they think that Bitcoin could come all the way back to here. I just can't subscribe to that theory just because I just don't think that it's going to be the case. Now, I'm going to switch over back to the weekly and then we'll come back to the price because I want to start counting bars. Now, one of the most simple theories you could learn when it comes to any trend analysis tool is that you need to get 12 or more bars in the direction of the trend to confirm the trend. So what that means is between bars 0 and 11, we don't currently have a trend. But as soon as bar 12 signals a trend, then we should be watching for that trend to continue. So it's based on the lows and it's based on the highs. So what I'm going to do is I'm going to count these bars and we're going to see if we got 12 or more bars in the direction of the trend and if the trend was confirmed. So this is bar 0, bar 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So what that means here is that if the market is in a downward trend, we need to get 12 or more bars in the direction of the trend, and the 12th bar or more out needs to be the lowest bar in the sequence. So if I go down here now, we'll just double check this. The low, especially on this chart that I'm using, the low in this instance was 29,247. This low was 29,500. So this one was 29.2, and this one here was 29.3. So technically speaking, this bar here is still the lowest low, and it was bar 10. So this whole sequence here, where a lot of people were calling the downtrend, it's still, if I zoom out and just resettle this, it's actually still all considered part of the longer term uptrend, okay? So no downtrend was actually confirmed, and that also means that anyone who's drawing any form of trend line in this area, all the trend lines would have been actually invalid and incorrect. Now, if Bitcoin touches below this point here, then it would be considered a downtrend. So if Bitcoin moves up and then down and breaches this point, we technically have a downtrend, okay? So that means from bar 0 to bar 1, all the way down to anything that happens around here, all part of the same move, okay? So it's not a separate move. And the reason why it's not a separate move is because to classify it as a separate move, we need to have 11 or more bars in the direction of the trend. So we can't have a separate uptrend in an uptrend that's not yet a downtrend. Does that make sense? So still, this all is still part of the longer term uptrend. That's just, I'm not trying to rebut or rebuttal what anyone else is saying. It's just a simple fact. I'm just showing you the fact, okay? So when it comes to these people suggesting that the price is going lower, it's not that easy to suggest price is going lower when we don't yet have a downtrend confirmed, okay? So if price is going to go lower, you can't confirm it until you get a break below this low. That's unfortunately the simple fact. Now I'll go ahead and double check this. I believe I have different data on this one. So 29.3, 29.2, 29.5, yep. So still based on this data set as well, this low here that occurred in June, which was another major one that I pointed out, is still the most significant low that should be watched. Okay, so let's say hypothetically Bitcoin does fall lower. First of all, and I don't want to make this video at all about time or anything like that, because that's not the theory behind this video, but I am expecting a reversal in the market around the 25th. So let's say, for example, the market moves up and it hits a top on the 25th, or even pushes out to the 28th and makes a top on the 28th, just hypothetically. And the market then starts to push lower. First of all, the market needs to push below the 50% level of its most recent run and stay below it. So it's currently closing above it. Let's go ahead and get that up. The most immediate significant level is this one right here. The market is currently above that, so it's currently ignoring the downward bias, or it's not putting much emphasis on the downward bias. Once it, let's say for example, it goes up, once it pushes below it, it needs to come down and breach through our first price cluster. Once it breaches through the first price cluster, it then has to go down and breach through the second price cluster, which also coincides with the major level. So you got to remember this one. Let's go ahead and take a look at these two levels. This is 61.8% of the all-time range. This one is 61.8% of the all-time range on a locked plot, okay? So they're both important and significant levels. Let's go ahead and wipe this. So we need to get through this one, we need to get through this one, we need to get through the price clustering on these two occasions, and we need to breach this low here, which would signal a confirmed downtrend. And only once we've done that is 20,000 on the cards. Okay, only once we've done that. So we have 1, 2, 3, 4, 5, 6, I should say 5 major support levels and 1 minor current support level, which could easily be broken. It could easily be broken today. So that's the downward bias. Now, of course, I've changed the downward price clustering to red and orange, so I'll start marking them in the future in red and orange for the downward clustering, and to the upward clustering I'll keep in green as they signal areas where the market could change trend as the market moves up into them. Okay, obviously you're seeing now that we have a price clustering or a potential sell point around the 66 to 68,000 mark, which is above the last all-time high. I've already been over that one numerous times, but just something to consider. Okay, so another one that we got to watch. So we had this 38 to 40 mark, and this 32 to 35. Let's go ahead and take a look at the squares. So we got 39,000. It's a 220 degree. And what was the other one? 34. And then we got 34.2, which is 220 degree. So Bitcoin would definitely need to capitulate significantly and breach these levels, and we can see just how important these levels are numerous times. These levels are very significant. It would have to get through them, push through every single one on its way down without caring, breach through all the time aspects, breach through all the price analysis and all the trend-based formations to go lower. So that's just pretty much my thought pattern on this, and it's always important why you should be looking to the top side and the bottom side, because again, it is about probability. Now, the reason why I continued, and I'll just say it again, continued to look at the bullish side was because probability still suggests that we're moving higher. Okay, there is no lower basis yet that we should be watching, and you already know why, because we haven't breached the June low. We have no downtrend. Okay. So let's go ahead and take a look at our Elliott Wave. We do have the first subwave, what looks to be the first subwave of Elliott Wave. And this is in our longer term 5-strike higher. And the market has come down. It's come down into around the 50% level, which is suitable for the Elliott Wave. And now we're also heading into time counts for Elliott Wave. The first one is expiring around the 28th of the 9th, and the next one goes out to the 4th of the 10th. So those are definitely the most recent Elliott Wave formations that we're watching. And if this gets confirmed that the low is now in, then that would push us up into phase 2, which if I go ahead and put phase 2 on right now for you, phase 2 of the upswing, I mean, not phase 2 of the Elliott Wave. So Elliott Wave 3. I'm just going to be hypothetically doing this now. If this is the low, that would give us our first price target of around 63,000, which is coinciding with the next top. Our second price target of 77,000, and our final price target, if the wave 3 extends, to around 101,000. Now, of course, I won't go into the time aspecting of when we'll be looking for the dates of changing and trends for this in this video. I'll make a different video on that. But if this is the low here, if it is the low here, then we can expect the market to go to these sort of levels. Now, the thing with Elliott Wave is that when we look at Elliott Wave, and let's just say this was our point A, this was our point B of the first sequence, or the first wave, Elliott Wave in wave 2 can come between 38.2%, 50%, 61.8%, but it can also go down as far as 100%. So you can actually get a double bottom in the Elliott Wave sequence, and it would still be confirmed as a first wave, okay? If the market breached this level, then this here is considered not an Elliott Wave to the upside, and it is just simply ignored. So we can still go down to this level. That is completely okay if the market did breach there, and it would be still considered a Elliott Wave. And if that was going to be the case, if I can try and find it and grab it, I'll just delete it and re-add it. I'm just going to go ahead and put in some new price projections. If the market fell this low, then that would put 100% level obviously at the top, because that's just a repeating range. 161.8, just above the last top, which would coincide with our price cluster, and then 90,000 is also on the cards. So I'm not saying that the market's going to come down this far. I'm just saying that even if it did fall to anywhere between this top and this bottom period here, it is still considered part of the Elliott Wave sequence and can still play out. Now, the reason why I'm showing you all this is because, remember, it's all about applying the analysis and applying all of it and then getting your probability of success. I've just been showing you more so cycles and mass pressure charting. though there is a lot more to it than that, and I build my case based on various reasons, but I try to take into account everything, because there is going to be a time that I'm going to be wrong, and I need to be able to swiftly change and take into account new information that comes up, okay? So just with the Bitcoin cycles as well, if this is going to be the low in the run, so the major low that occurs in this period here, then we are already counting forward from that period into these time periods. But if this is the low, and if we are using this midpoint here between this one, and we do get a left translation top, that would technically, so if we draw the left translation top in, that would technically put us in for a lower low in this section here. So Bitcoin needs to reverse now if it's going to reverse and pitch a higher low, because that would then start to switch the probability that the bias could, just based on one theory alone, we're not getting multiple theory confirmations just yet, just on one theory alone, that we could be pitching a lower low, which means that it's going to fall below this low here. And in this period here, it could be lower than what occurred over here. So we need to factor that in. Now, if you want to go ahead and purchase the 2022 mass pressure chart, if you haven't already taken a look at our 2021 mass pressure chart and those dealings, we've already built out the mass pressure chart into 2022. We've already taken a look at what the next year is going to be looking like. And as we move into 2022, there's already another theory playing out, another point of actions that we need to be following, because next year is going to be completely different to this year. So we've already moved this mass pressure chart into the future, we'll recalibrate it, and we're already looking for price action. So if you want to go ahead, I've included it free of charge, part of our forecasting service. The link is in the description below. And we're getting a lot of people come through. So if you want to be one of those, I guess I'll see you on the inside. It's as simple as that. If you learned anything, go ahead and leave a comment. If you like this video, leave a thumbs up. If you didn't like it, there's going to be a few thumbs down. Not everyone's going to like it. That's totally okay. And if you want to stick around and see our future videos, you can hit the subscribe button. I'll talk to you soon.